and welcome to Street Signs. I'm Sonia, Shenoy, and with me is Udayan Mukherjee. It has been quite a tricky week for our markets. In fact, we saw a massive sell-off on Friday where the Sensex was down more than 400 points. And overall for the week as well, the Sensex and the Nifty have closed with cuts of almost 2.5%. In fact, in Friday's trade, we saw some serious heavyweight damage. So stocks like Reliance, HDFC, L&T, Kotak Mahindra Bank were all under pressure, raising questions whether this uptrend has been arrested. In fact, to answer those questions, we have a lot of guests on our show today as well. But before that, Udayan, you know, we have seen the markets correct quite a bit, especially in trade on Friday. But the sense you get from dealers is that perhaps this correction could be shallow in nature. Do you feel that the market is getting a bit complacent at these levels?
Well, there is some complacency out there, Sonia. You're quite right. But the consensus is not always wrong. So there are phases in the market where the consensus is right for some time. It does worry me, you're right, that everybody that we speak to nowadays speaks about a multi-year secular run. And frankly, it would please me a lot if the market were to give you a bit of a correction right now and you heard the voices of a few doubting Thomases out there. I think the market needs that. A dose of slight caution, slight skepticism, some people questioning the trend. I think those are the things which the market will feed on then for the next leg of the rally. Right now, I think there is just too much complacency, too much optimism. So there could be a phase, I'm not sure whether it's arrived already or in the next few days or weeks. There will be a phase, I suspect, where there will be a correction and there will be a phase where the market will not be that complacent. I don't know whether the Nifty is going to go down very significantly from here, but a little bit of a correction I think would be a healthy thing for the market right now. And if the index were to correct to 73, 7400 over the next few weeks, at some point, I think it would be not just a good opportunity for longer term investors, but also going with the scheme of or general theme of even bull markets correcting periodically, and which we haven't seen for the last 6 months at all.
So, do you think the mindset should be that, you know, approach this healthy correction with a positive bias, get out there and buy some of those good quality names like L&T, Reliance, Coal India that have actually corrected quite a bit?
Well, that should be, if you believe that we are at the start or relatively at the start of a 2-3 year or 3-4 year cycle for this market. The problem with this kind of thinking, at least for domestic investors or local investors, Sonia, is that when markets are very strong, like the Nifty at 7,700 or 7,800, everybody talks about buying the dip. But the moment the Nifty goes to 7,300, on the back of a 400-point fall or a 500-point fall, if that were to come about, you'll immediately see that the tone has changed quite completely, and a lot of people start talking about sub 7,000 levels and whether the markets had run ahead of themselves. A lot of worries which people are not articulating today will come to the fore. Therefore, this whole theory of buying the dip is fine when the market's moving up and people are waiting for that dip, but when it actually comes about, fewer people jump to it with the same kind of alacrity that they are speaking about it. So let's see if we get a correction first. Yes, I think, to answer your question, a 7-8% dip in the market would present an opportunity because parts of the market do appear a bit stretched. And if that were to come about in the next few weeks, I do think a lot of people should start deploying more money into equities. But let's see what shape this correction takes, whether it's indeed a very shallow one like the last few ones, or it gives a slightly deeper buying opportunity.
All right, so let's pose that question to our first guest on the show. We have Sandeep Bhatia of Kotak who joins into our conversation. Hi Sandeep, thank you for joining us. Same question to you. Are you in the camp that believes that this market will see a correction now? And if yes, do you think it will still be one of those shallow corrections that we're used to, or could things be different this time around?
I think the market needs a correction. Market has had a great run. And if the market is really going to be a structural bull market, we need a correction. I'm in the camp that expectations are high. Announcements and delivery will take longer to come. I'm not saying that the delivery will not be coming. I think that intent is still very much strong. But given the nature of the problems, given the nature of society in India, solutions will take longer than maybe market participants or simplistic analysis allows us to believe that things can change overnight. It won't happen.
What shape do you see that correction taking? Do you see that being a time-wise consolidation where the market grinds in a bit of a trading range for 3-4 months and does not progress ahead? Or do you see a sharp price correction which takes the Nifty to maybe even sub 7,000 levels? Is that possible in your eyes?
Look, it depends on how events stack out. If there is no major disappointment in terms of some policy announcement or some external event which takes markets off, then it is a time correction. It just grinds through for a longer period of time. If you look at what are the policy announcements coming through, we have the RBI policy on the 5th of August. We expect no change in rates. There's a small camp which actually expects a cut in rates. Let's wait and see if that's delivered. I think it's a bit still early in our view for a cut in rates to happen. It has to come through probably after October. Our economist thinks that it will happen, if it happens, only next year in Feb-March. So let's wait and see what the RBI policy brings through. I think the other thing which the market will wait for is the August 15th Independence Day speech. The only big discussion or vision that was laid out was in the address to Parliament by the Prime Minister. Now, we had a very good, positive vibes coming through after that, which raised expectations for the budget. The budget clearly didn't have that kind of a vision. So 15th August and the fact that there's a cabinet expansion or reshuffle due, these are two big events which will again be read into by the market. So if there's any kind of a disappointment on that front, it could be a sharp correction, but I think I would still veer to the view that it will be a time correction more likely than a sharp correction.
We're coming towards the end of this earnings season, Sandeep, and I guess a large part of the debate over the last course of this week has been around L&T. The stock has corrected quite meaningfully. What would you tell your clients about a stock like that, which is a big holding, I imagine, of many of their FIIs?
Well, I think L&T did us all a favor by showing more clearly how some of its business, especially its hydrocarbons business, is doing. There were questions raised all through the previous quarters about disclosure about some of these businesses. Now we're going to get this on a quarterly basis, which is a very big positive. I think as far as L&T is concerned, it is clearly stands out in a sector, both in terms of its balance sheet, its scale of operations, and therefore, despite the fact that we expect this year to be weak, I think it is too much to expect that a cyclical rebound will take place this year. Our own expectations are that it will happen next year, and it will be a slow burn until then. I would be a buyer into the stock, but it's still a sideways market, and this quarter, the next 3 quarters are not going to give you spades of good news. So be ready to wait it through and buy on any dips.
How does one play the revival in the domestic consumption cycle now, Sandeep? Do you do it through the auto names like Maruti, where there are serious green shoots that are visible, or do you look at other pockets like cement, etc.?
I think I would go for consumer cyclicals and rate sensitives to play the revival story. We expect rates to come off next year from Feb onwards. The consumer sentiment has improved, but it's still weak, broadly weak. If you look at numbers which are coming through for most consumer stocks, I think HLL was an exception in that regard. We'll have to wait and see whether we see a couple of more quarters from HLL, which may point to a broader recovery. I would still think that broader consumption sentiments remains weak, at least for the traditional consumer stocks. So autos, primarily Maruti. We like Maruti a lot. We think that earnings are going to go in the next 2 years by over 80%. It's still not. It's run up. It's still a broadly fairly valued stock, but with an 80% growth story from here on, there's room to make money in the story. You look at Tata Motors. That's play primarily on international businesses, which is like 85% of total value, but the truck and the passenger vehicle business are seeing a whole new trust, especially in the passenger vehicle business, and if that comes through, that adds value to the entire stock. So the autos is a good way to play because they're not only are they rate sensitives, but they will play the cyclical upturn in addition to the consumer sentiment improvement, which we expect next year.
All right, Sandeep, thank you for your views. You have a great weekend. We'll see you again later. That's the word coming in from Sandeep Bhatia of Kotak. A correction could be on the cards, but the overall uptrend is still intact. We'll do one thing. We'll take a break on Street Signs. When we come back from the break, Vibhav Kapoor of IL&FS will join us.